Hey, what's up guys? Welcome back to my channel. I'm Leo Chen of Levitate Style. In this video, I'm going to show you guys my top 10 holdings in my $100,000 stock portfolio from 2020. Before we get into this video, please follow me on Instagram at Levitate Style. I post daily men's fashion and travel content there, so follow along. Also, hit the subscribe button. We got new videos on this channel every week. As a disclaimer, I am not a financial professional and this is just for entertainment purposes only. I'm very excited to do this video for you guys. This is probably the most requested video in this topic. If you guys missed the first video, I kind of just talk about my journey going from not knowing how to invest at all, not investing at all, going from zero to building it to $100,000 in 2020. We'll start from number 10, working our way up to number 1. Number 10, I have Facebook, and the ticker is FB. If you guys didn't know, Facebook is a social media networking website, and they also own Instagram. My average cost is $197.76, and this makes up for 1.81% in my portfolio. My average return right now is $468 with around 33-34% gain. This was one of the first stocks that I bought because I didn't know how to invest. I just bought companies that I knew. Having almost $2,000 in one stock is kind of like my long-term take. I mentioned in my first video, I was still just kind of slowly investing. I was going maybe like $1,000 a week, and even then I was buying a lot of different companies. You know, it's kind of like a kid in the candy store. I was just buying like all the stocks, all the companies look good, they all had high growth, you know, everything was going up. This is definitely one of the stocks that I should have kept buying as it kept going back up. Coming in at number 9, I have Royal Caribbean. Ticker is RCL. And Royal Caribbean is a cruise company. I have 27 shares. My market value right now is at $1,950. Pretty close to $2,000. My average cost is only $30.85. My total returns is really good on this guy. Total returns right now is $1,117, and my gains is 134%. So I've already more than doubled my money. If you guys don't follow me on Instagram, I am a men's style and travel influencer. So actually, Royal Caribbean, I've been on their ships quite a few times, and I personally really love cruising. I really enjoyed the whole experience, getting to see so many cities and so many ports in a short period of time. I just really couldn't see cruise going away out of nowhere. Compared to an airline, the way I was thinking is just like, airlines, there's so many airlines, a lot of competition, and you always hear about how like airline costs and like how the profits is like razor thin, and it's a huge industry. There's a lot of people working on those ships, a lot of people that travel on these ships. So I just couldn't really see it, poof, out of nowhere, gone. Coming in at number 8, I have ARK Innovation ETF. Ticker is ARKK. ARK invests in an investment company based here in New York City. And this first one here is ARKK. You're gonna see another one later on in this top 10 list. I have 17 shares of ARKK, and my market value is $2,183. My average cost is $99.63, and this makes up 2.13% in my portfolio. I'm at 28.94% gains, and that's a pretty good growth, around 30% mark. My total returns right now is $492.65. The main thing from ARK Invest is the active ETFs. They have a few different ones here. I have invested in all of them in my main portfolio as well as my Roth account. When you buy into ARKK, you're buying into an ETF. So that means they also buy into a lot of companies. This one here specifically, their top 10 holdings, they have 10% in Tesla, 6% in Roku, 5% in Square. It's kind of like a nice low risk, high reward play, and that's why ARK has been one of my favorites in my portfolio. This is one of those stocks that like every time I have like a short-term sale, or if I'm wondering what I should invest my money in, I just pour more money into the ARKs. It's just a lot of different companies. I don't have to risk my own money buying into all these companies. Of course you can, but in my case, I don't have to deal with checking my account every day, figuring out what the risk is, figuring out when to buy, when to sell. And also, this is another way that I'm buying more into Tesla, because this portfolio alone has 10% of Tesla in there. So coming in at number 7, I have Mesa Air, and the ticker is MESA. Mesa Air is an American regional airline based in Phoenix, Arizona. I have 330 shares. My market value is $2,211. My average cost is $6.87, and this makes up for 2.16% in my portfolio. I'm actually down on this stock at the moment, negative 2.41%, so I'm only down $54.62, but this is one of those high potential that I am betting on going into this year. Mesa Air is an airline that I've never even heard of just a few months ago, but this was recommended on a lot of YouTube channels, and I did my research and I thought this is a pretty good opportunity right now. Early on last year, I did buy into a lot of airlines. I bought Delta, American Airlines, Southwest, United. I even bought Boeing, kind of cashed in on my gains, and I bought other stocks. Mesa Air, I found out recently through research that it does have really good numbers, and you can right now buy it under book value. And even then, it is a pretty cheap stock that you can buy in at. Initially, before investing in it, when I had no idea, I thought every stock was like $200 or you had to spend a minimum $1,000, but no, this is like a $7 stock. You can buy it instead of spending money on a coffee, spending money on a lunch. You can save enough money there and there to buy companies like this. Coming in at number 6 is Enphase Energy, and the ticker is EMPH. Enphase Energy is an American energy technology company headquartered in California. My position, I have 12 shares, and my market value is $2,440. My average cost is $136.86, and my portfolio diversity is 2.38%. As of today, my total returns are at $798, and I'm at around 48.6%. Enphase is a very exciting company that I started investing in recently, just because of the whole thing with solar panels, solar energy. I do think that is the future, and there's a lot of growth in this industry. Recently in the news that Enphase Energy is going to be added on the S&P 500, so that's a pretty big deal, and that's going to drive the stock prices up higher. For a lot of these long-term stocks, my top ones, you can see I try to keep them around like 1 to 2%. I think that's the better way to balance your portfolio, so you don't have too many eggs in one basket, too much risk in one sector. Coming into top 5 now, at number 5, I have ARK Genomic Revolution ETF, and the ticker is ARKG. They invest in companies in the technological and scientific developments in genomics, and also things like molecular diagnostics, stem cells, biology. In my position, I have 27 shares, and my market value is $2,538. My average cost is $78.53, and this makes up for 2.47% in my portfolio. My total returns is around $420, and my percentage is around 19.85%. Pretty good so far, and that's also a little bit lower because I just started adding a lot more recently. ARK ETF, like I mentioned earlier, is my go-to ETF investment. In their top 10 holdings, they have 7% in Pacific Biosciences, they have 5% in Twist Bioscience, they have 3% in CareDx. These companies I don't really know, I'm not expertise in this topic, and so by investing into ARKG, I'm investing in this diversified portfolio of all these companies, and this is a really good low risk and safe way to me to invest in these companies. This stock right here is in my main 100K portfolio, but also in my Roth retirement account as well. Coming in at number 4 is Alibaba. The ticker is BABA. Alibaba is a Chinese company that specializes in e-commerce. Alibaba is kind of like the Amazon of China. My position is not the happiest thing. I'm at 18 shares. My market value is $4,086. My average cost is $250.64. My portfolio is 3.98%, so a little bit higher than I wish. Total returns, I'm at a loss at $423, and my percent is at a negative 9.39%. I have $4,000 in this stock, but if I wanted to sell it today, I lose out on $400. It's not the craziest thing. It's a little bit complicated when it comes to a company like Alibaba. They might have really great numbers, amazing sales, but because of the recent news with the US government delisting Chinese companies, but also the China government with fighting with the founder, it's just a big mess. There's a lot of upside, there's a lot of hope in the company. This is definitely one of the more riskier play at the moment. And I think once this goes back up, it's gonna bring my portfolio up to another level. And at number 3, I have NIO, and the ticker is NIO. NIO is a Chinese automotive manufacturing company headquartered in Shanghai. They specialize in designing and developing electric vehicles. My position in NIO is 84 shares, and the market value is $4,284. And my average cost is around $41.86. So NIO right now makes up for 4.17% of my portfolio, and my total returns right now is $767, around the 21% gains. The news and the research I gather about NIO is that basically they're like the Tesla of China, and that is a pretty big claim, a pretty big bold statement. And NIO has been growing a lot in 2020. It's really, really impressive. In the past year, it's gone up 1,117%. NIO I've been buying a lot. I've been buying it since June. But like I said, as an early beginner investor, I just bought very little. I bought literally one at a time. I bought it at $6, $7, and I don't know where it jumped up to 13 and 17. So I bought like one at a time. NIO could be the next big direct competitor against Tesla, and that is saying something. Coming in at number 2, I have Apple, and the ticker is AAPL. So Apple, if you guys didn't know, they design, manufacture, they sell smartphones, personal computers, tablets, wearables, and accessories. My position, I'm sitting at 36 shares. My market value is $4,565. My average cost is around $85. And my portfolio, this is around 4.45%. My total returns is $1,482 at around 48% gain. In the past year, they've gone up 72%. In the past 3 months, they're up 10%. So the growth has kind of slowed down the past few months. I bought them early on, and I bought them at the dips, and they also had the stock split. Since then, I kind of slowed down buying them. I try to buy them whenever there's a good opportunity. I don't know how much growth there is from this point on. I'm not as aggressive buying it anymore because the past 3 months only 10%, and I'm at a pretty good position. Coming in at number 1, it might come as a no-brainer, no surprise. It is Tesla, and the ticker is TSLA. Tesla designs, develop, manufacture, and sell fully electric vehicles, energy generation, and also storage systems. My position, I'm at 18 shares. My market value is $13,732. My average cost is $405. My portfolio is pretty high at around 13%. My total return is around $6,439, and my gain is around 88%. So my first share I bought into Tesla was back in June 24th at around $958, and that is the price before split. I bought right before the split, August 28th, for $2,215, and then I bought a few more around August, around that post-split price. And even back then, buying after the split was really scary because that was like the all-time high at around $470. And then when it dipped down to $400 and then $350, of course, it's like, all right, well, I'll buy one at the dip. It is a pretty big investment, especially for a beginner. And so that was kind of scary. And then next thing you know, it jumped up to $764. I mean, Tesla is a lot of hype. I do regret not buying them early on in the pandemic. $400 back then seemed like a lot to me. I didn't know what I was buying into, and obviously I'm kicking myself I didn't buy it early on. Any kind of good news that makes the market react really crazy, and that's why it's been jumping up higher and higher. Another all-time high. Even from my beginner 1-year experience investing, I don't want to bet against Tesla. I feel like every time I sell, it goes up to a new all-time high, and I just regret selling it because I can't get back to these prices again. I like to buy into the ARK Invest, the active ETFs, because in some of the portfolios, they have around 10% of Tesla. All right, that was a lot. I hope you guys enjoyed this video. Hope this was helpful for you guys to understand how I grew my stock portfolio, and these are the top 10 holdings that I have. As you can see, some of them is in the negative right now, and that's kind of what I'm growing and hoping that will take me to the next level. Hope you guys enjoyed this video. Please follow me on Instagram at Levitate Style. I post daily men's fashion and travel content there, so follow along. Also, subscribe to the channel. We got new videos on this channel every week. Please like, subscribe to the channel if you guys haven't already. Thank you guys for watching.